Is Meta Platforms Inc. a good company? The answer is a complex one, with strong arguments on both sides. It depends heavily on whether you are evaluating it from a financial, social, or ethical perspective. From a business and investment perspective, Meta is widely considered a good company with a robust and powerful business model, massive scale and dominant market position. Meta owns some of the world's most popular apps, including Facebook, Instagram, and WhatsApp, which collectively reach billions of people. This enormous user base gives the company a near monopoly in the social media and digital advertising space. Strong financial performance. Meta has a history of strong revenue and earnings growth. Its Q2 2025 results showed a 22% year-over-year revenue increase to $47.52 billion and a 36% increase in net income to $18.34 billion, reflecting a strong performance. The company has successfully navigated economic headwinds and competition. A driven innovation. The company is a leader in AI development and is actively integrating AI into its ad tools and recommendation systems. This is paying off, with new AI-powered ad tools lifting conversions and engagement on both Instagram and Facebook. Strategic investments. While its investments in Reality Labs and the metaverse have been costly, they represent a long-term bet on the future of social technology. This forward-looking strategy, along with massive investments in AI infrastructure, positions the company to potentially lead the next major technological shift. Attractive to investors, the stock has performed exceptionally well. With a 31.8% year-to-date increase, outperforming many of its peers, analyst ratings are generally positive, with a consensus of buy and an average price target that suggests future upside potential. From an ethical and social perspective, this is where the evaluation of Meta becomes much more complicated, and many would argue it is not a good company. Privacy and data concerns. Meta's business model relies on collecting vast amounts of user data for targeted advertising, which has led to numerous privacy concerns, data breaches, and investigations by government agencies. The company has a history of criticism for its handling of user information. Social and psychological impact. Critics have pointed to the negative effects of Meta's platforms on users' mental health, including issues like social media addiction, feelings of sexual jealousy, and the promotion of unrealistic body images. Court documents in the US have even alleged that Meta designed its platforms to deliberately develop addiction in children. Spread of misinformation and hate speech. The company has faced extensive criticism for its role in enabling the spread of misinformation, propaganda, and hate speech. The algorithms that prioritize engagement and clickbait have been a key factor in the dissemination of harmful content. Regulatory and legal scrutiny. Meta operates under constant scrutiny from regulators in the US and Europe. Legal and regulatory headwinds, such as the Digital Markets Act in the EU, could significantly impact its business and financial results, creating a material risk. Conclusion: as a business and investment, Meta is a very good company. Its financial performance, dominant market position, strategic bets on AI and the metaverse make it a powerful force in the tech world. It has a strong balance sheet and is a leader in its field. However, from an ethical and social standpoint, the company faces significant challenges and has been the subject of widespread criticism and controversy. The negative impacts of its platforms on privacy, mental health, and the spread of misinformation are serious and ongoing concerns. An individual's judgment on whether Meta is a good company will ultimately depend on the weight they give to these different facets.
Okay, let's go.